let's get straight to it. You're promising buybacks. Well done on the numbers, by the way. You're promising buybacks. I want to know, are you in the zone of RBS at 1.6 and Lloyd's at 1.75 billion? What kind of numbers can you tell us, or guidance can you give us on the buyback?
Right. So first, for 2018, we more than trebled the capital that we returned to shareholders versus 2017. We paid over £1 billion in our dividends, 6.5 pence per share, and then in the fourth quarter, we paid around £700 million purchasing or repurchasing preferred stock. So about £1.8 billion in total in 2018, more than 3 times 2017. We have Brexit in front of us right now. We took a special reserve actually in the fourth quarter of £150 million for that. Our goal is to increase the return of capital to our shareholders in 2019 in a progressive dividend. And let's see how the buyback program unfolds during the course of the year.
Yes, and part of that decision, Jes, no doubt down to the numbers that you've had today as well. Can you give us a little bit more detail and colour in how the markets division did?
So the market division, I think, did very well in 2018. Every quarter, we gained market share in our markets division. For the year, our markets revenues were up some 12%. The U.S. banks were roughly up 5%, and the European banks as a group were down 5%. So we had the strongest performance of any of our competitors in the markets revenue gain year over year. So we feel great about that. So we feel that we're in a good position. The overall bank had positive jaws for the year. Our income went up. Our costs went down. We landed our costs for the year within our cost target for 2019. So having £5.7 billion of pre-tax profits up 20% year over year, we feel good about today's results.
Jes, I've got to give a shout out to the M Live team. They're running the numbers. They're doing that while we're talking to you. FICC trading revenue fell by 6%. That's better than the market had estimated, and you certainly beat the US peers. With that in mind, is this a strong, I suppose, weapon to use to push back against Mr. Bramson and his call for change within the IB?
We put forth our strategy for Barclays of being a transatlantic consumer and wholesale bank in March of 2016. We think the progression we've made in terms of recapitalizing the bank, dealing with our legacy issues, improving the profitability of the institution, we still have a ways to go. With our stock settled at this level, we cannot accept that sort of pricing. So we need to continue to push our strategy forward. What I do think Barclays needs is consistency. I think we need to have a stable strategy that people can get behind and drive further revenue growth. But we think 2018 was a good demonstration of the progress that we're making, and ultimately we believe in the stability of this strategy, being a diversified bank, and we'll continue to push it forward.
Jes, can you give us any insight on whether the board of directors is likely to recommend that investors vote against Edward Bramson at the annual meeting in terms of him having a seat on the board?
Yeah, no, John McFarlane in his chairman's letter announced this morning has said that the board unanimously is going to recommend that the shareholders do not vote that Mr. Bramson get on the board. We obviously want to be engaged with all of our shareholders. We want to listen to their ideas and their thoughts. But to have that engagement between shareholders and management and the board, we don't believe a board seat is necessary to do that.
OK, let's talk about Brexit. We've spoken to you a couple of times. You say you're very well prepared for it. You've taken a charge in this set of accounts. HSBC are worried about corporate credit. You've got 25% of the credit card market in the UK. Are you seeing any concerns, anything of issue for us that we should note? Are you concerned about a recession in the UK on a hard Brexit? The latest.
You know, interestingly enough, whether it's consumer or small business or corporate, we're actually not seeing yet any signs of stress in terms of credit quality. We did take a provision, an additional provision of $150 million in the fourth quarter, just to be cautious and to be prudent. What actually we're seeing right now are increases in cash levels. So actually, our deposit base is growing more than one might expect. So I think right now the economy itself is not correcting for troubles in the Brexit market, but you do get a sense through cash levels that people are clearly being increasingly cautious as we come to the final weeks and hopefully not much longer of uncertainty around Brexit. But right now the economy and credit is reasonably in good shape. But I think it's wise for the banking industry to be prudent in terms of extending credit and how we manage credit, given the uncertainty of Brexit.
Yes, and Jes, Brexit, of course, one of the uncertainties that markets are grappling with at the moment, not least trade war. And also, of course, we got the Fed minutes yesterday. We are seeing equities rally today. Questions coming over whether that rally has further to run. What's your view?
You know, I think clearly we are seeing growth slow in the global economy. Very much in Europe. We have a possible recession in Italy, clear signs of weakness in Germany, issues in Asia as well. And I think the challenge that the market is wrestling with is still very low interest rates. And on one level, those low interest rates support asset valuations that are higher. The flip side is if we go into a recession, the bullets that central banks around the world have to use to try to support a stronger economy are very, very limited. Only the Fed has really moved its interest rates 9 times since they started to pull back from monetary easing. But the global central banking network, I think, doesn't have the firepower to work against a recession if one is coming our way. And so you've got low interest rates that's going to move up asset valuations. But I think there's this overarching concern that if we go into recession, we may not have the monetary policy that we need to fight it.
Jes, I mean, it was a bruising December and effusive January. Did you cut risk? I know I ask you this from time to time, but you've mentioned VAR a couple of times when we've interviewed. Did you cut any risk levels at the bank at the start of 2019?
No, we did not. Our levels have not been cut.
Can you update us on costs, Jes, and where you are with cutting costs?
So 2018 versus 2019, we took our costs from roughly 14.2 billion pounds to 13.9 billion pounds. 2 years ago, we set out a cost target for 2019 of 13.6 billion pounds to 13.9 billion pounds. So we landed in that range in 18, a year early. We have flex in our cost base, which we will use according to the results of the bank. But we feel that we have a good control over our costs, even to the point that now I think this bank is going to start to invest more going forward, given that we are in that cost range.